Alright guys, welcome. So in the previous video we talked about market structure, how you can identify the trends, right, and then trade accordingly. Okay, but what I want to do in this video is talk about candlesticks. Alright, candlesticks, and these are basically the things you find on the market, on the charts, right? They tell a story. That's actually the language of the market. So they tell you a story, and if you're able to understand the story, you'll be able to trade and make money. Let's just hop right into the chart, right? And I'm going to show you. So this is a candle. This is a normal candle, we all know. Alright, and I'm going to use this to explain what candlesticks are, right? Because this is actually a candlestick. This is what we know. So as you can see from this image, you have you have the body of the candle, which is this waxy part, right? From here till here is the body, right? And then you have the wick. Okay, so the wick is the highest point. If you blow out this flame, the wick is the highest point of the candle. And every candle has a wick. It's just like you don't see the wick until the candle is exposed, until the flame has burned, melted the wax away. That's when you now see the wick. Okay, so every candle has a wick. And in the market, the candle starts at a point and closes at a point. So let's call this our high because it's the highest point, and let's call this our low because it's the lowest point. Now, what makes this wick exposed is the flame, right? But in the market, what makes a wick exposed is pressure from the top or pressure from the bottom. And pressure from the top is actually selling pressure because it's the sellers that push price down. So a candle is basically price. It's just like you take a mold, put wax inside, and when you put wax inside the mold, you let it solidify and bring it out, right? So the candlesticks on the market chart is price captured within a certain time frame. Okay, I'm going to talk about this in our next video. It's going to be time frame analysis, time frame and multi-time frame analysis. But first of all, you need to know that price and time is what we're actually playing with here. And then a single candle captures what price does within a certain time. Okay, so let's assume this candle is our mold, right, and then price is inside, so we can interpret the mold and see what price has done. Okay, so this is the body of the candle, this is the wick, right? So this candle, if you're going to measure this candle from the bottom, you start here, say this is the lowest point, stretch your ruler all the way to the top and say this is the highest point. And then when the candle melts downward, you say it exposed the wick, so it's burned down to this point. Okay, now I'm going to try to explain something here by using, let me clear this. Okay, freeform. So if you cut this flame here, copy, paste, and I'm gonna flip it vertically. All right, if you bring this candle down, let me reduce it. If you bring this candle down here, let's say you bring the candle here, okay, and I'm just gonna take a black, big black, whatever, and just erase all of this part out. I'm just trying to make it very relatable so you guys can understand. Right, so you're seeing the same candle, okay, but now this one brush, okay, but now this candle has fire at the bottom, right? But the flame on top is longer than the flame downward, so this flame here is going to burn. The wick here is going to be more of the wick is going to be exposed at the top than the one at the bottom. All right, you can see how short this wick is compared to where the wax is compared to this one. This one is longer, right? So the more the pressure from the top, the longer the wick is going to be at the top. So if you see a long wick, that means there was much pressure coming from the top, right? Where you see a short wick, there was just very little pressure coming from below. All right, so let me hop onto the chart. We see a candle has four basic parts. It has the open and the close, and then it has the low and the high. Okay, now the open and close differs for different candles, but the high and the low remains the same. Okay, so for a candle to be bullish, the candle has to start from a certain point, starts here and moves upward until it closes here. Okay, that's why it's bullish, because it's going up. for a bearish candle, because it's coming down, it has to start high, close low. All right. Okay, but before this bullish candle made this move from here to here, it did three things. It made sure it came here first and came here before eventually closing here. The same thing happened here. The candle started here, burned down all the way to this point. So before it came here, it made sure it came to this top and then came to this low and then eventually ended here. So the candles always do this. Okay, and then we'll call this, because it's a bullish candle, it starts from the bottom. So it's opened here. So this is the open, this is the close, but this is the high and this is the low. Whereas in the bearish candle it's flipped. So this is the open, close, high, low. All right, so these are the four basic parts of the candle. So when we hop onto our charts, I'm going to show you, and you're going to make everything's going to make more sense. So when you look at the candle now, you're seeing the wick at the bottom bar. You're seeing the wick, and like I was saying, price and time is what candle captures price action within a certain time frame. Now if you look up here, you're going to see 1 minute, 3 minutes, 5 minutes, 15 minutes, and what this just means is each candle here took 5 minutes to print, to complete. Let me go to Bitcoin, and I'm going to show you. I wonder what price is even doing. I'm going to show you. Wow. Okay, so this is a 5 minutes time frame. So every candle here takes 5 minutes to print. As you can see, this candle is still printing and it has 3 more minutes to go. So at the end of 3 minutes, it's going to close. And wherever it closes, if it closes below the open point, it's going to be a bearish candle. Whereas if it closes above, it's going to be a bullish candle. Now look at this. It's easy. Forex is actually very simple. Look at this candle, for instance. It still took 5 minutes, but it only moved from here to this top within 5 minutes, and it had a very long, wick at the bottom, which tells us that there was a lot of buying pressure coming from under, melting off the wax, right, and pushing it upward. Okay, whereas if you look at this other one, see how it started the same 5 minutes, but it's traveled longer, traveled further. It started here, ended here. It does not even have any wick. That means that at the point where it started, price did not go above it. And when price closed, price did not close above, where it closed. So it doesn't have a wick at all. And this just tells you how much force was in the market. Okay. So how do you combine this with market structure? One, you identify your trend. Know what the trend is saying. Okay. Here you're seeing a clear trend. High, a low, a high, a higher low. So at this point where you saw this higher low, you're expecting that from this point price is going to push and break this high. Okay, so it took a buy here. If you're taking a buy here, you'd have put your stop loss below the previous low, and you would have won this trade. Right, so you would have won this trade. Now I'm going to tell you a tool that you would use that would give you more profit, because whenever a bullish market is in session, like whenever the market is trending upwards, it's never going to end at this point. It's always going to go beyond. So I'm going to show you a tool and settings you would use for that tool to always capture some extra profit on top of the high. Okay, it's not going to work every time, because sometimes the market is going to change structure. All right, but for whenever it does, you're actually going to make extra money. But that's going to be in another video. So for this video, how do you now combine this? So you look at the candlesticks. See how this candle closed with so much pressure from the bottom. So this tells you that, okay, that means at this point there was now more sellers. Initially sellers were pushing price down, but at this point there are now more buyers. So you want to join those buyers and push price up. You're actually going to push price up. You just want to be on the ride. So when this candle closed here, you will now take your buy at this point, and hope the market does not come back and hit your stop loss. So that's what always happens in the market. Alright, so you're combining market structure and candlesticks. The market structure tells you what the market is going to do. It has created a high, it's going to come down to create a low. But at what point is it going to create the low? The candles will now tell you, this is when I'm going upward, so you can join me if you want. Okay, but these are just like this is just like learning a new skill. okay, and then you get a toolbox with different layers, and you're going to start with the basic tools. Maybe you're a handyman, you're going to start with a hammer, a pack of nails, maybe some kind of cutter, a scissors or something. But as you keep advancing, you go for your first job and you realize, oh, this house it has some nuts, it has some screws. It looks like a nail, but I can't drive this with a hammer the same way I would handle a nail. So you now look for a screwdriver, right? So you're now getting more advanced tools to add into your toolbox, right? So the more you're going deeper into this course, the more we're adding tools to your toolbox. So just like get a pen and make sure you're writing down all these tools, all right? And at some point, I'm going to be teaching you how to master these tools. And yeah, so that's that. So now you're combining market structure, you're putting candlestick analysis on top of market structure. So next, you're going to put time frame on top of candlesticks and on top of market structure. And this is going to be refining your trading skills as time goes on. Okay, so that'll be all for this video. I'll see you guys in the next video. We'll be talking about time frames, multi-time frame analysis, and all of that.